Cryptocurrencies are going to make a lot of people very rich. Now this video is a bit of a different one. It's a bit of a look into the future, a bit of price speculation and hoping for the best outcome. I want to put a few things into perspective and show you how the money market is compared to the cryptocurrency and Bitcoin price, and look at the 4-year cycle of Bitcoin and show if we look at the two different approaches on how high the price could rise if we look at the different bull markets that we just had. I'm Kieran from Crypto Bulls, and I'm happy to have you here with me today. Let's get started. So this visualization shows the value of different aspects in our financial ecosystem, and it's represented by blocks. So each block is around $100 billion. And we will start with silver. So silver is a bit of a smaller block than, I think it's the valuation of silver is around $8.2 trillion, if I'm not mistaken. You can correct me if I'm wrong. Then below that we've got the cryptocurrency market, which is also relatively small. It's around $200 billion, with Bitcoin at $125 billion. It fluctuates since like the rest of the cryptocurrency market, everything is a bit volatile at the moment, but that's always been the case. The rest of the cryptocurrency market is around, also around $45 billion. And that's these blocks here, which in comparison to silver does look pretty good, but let's get continuing. Biggest companies. So here we've got many companies. I made another video comparing the cryptocurrency market with the different SAP companies, and if you do that, then cryptocurrency market would be like the 28th place with a market cap of around 200 billion. So there are so many more companies that have a much higher market cap than the whole cryptocurrency market cap. So here are a few examples: Berkshire Hathaway, Microsoft. I think Microsoft is around $900 billion. Alphabet, that's from Google, Apple, Facebook, and Amazon. So all of these are pretty big companies, with the largest at $807 billion. However, this is a bit of an older number. The current number is around $990 billion, which is massive, especially if you compare it to the cryptocurrency market. The 50 richest people. Now, of course, these are only building blocks, so it's very difficult to imagine that one is actually $100 billion and how much money $100 billion actually is. It's just something that is very difficult for me to imagine, let alone anyone I know. So here we've got the 50 richest people: Gates, Bezos, Buffett, Zuckerberg, the founder of Alibaba, and Musk. Sorry, I just forgot his name. Alright, California's GDP is $2.9 trillion. The Federal Reserve's balance sheet is $3.5 trillion. And the balance sheet jumped to $4.5 trillion due to controversial quantitative easing. Now, when we talk about currency, we're talking about coins and banknotes. And the rest of the world, the total value is around $7.6 trillion, which is massive. And this is the physical amount of money. So where the coins and paper notes and everything that you can touch, the physical. So the rest of the world is pretty big. You've got USA, Japan, China, and Eurozone, which all have a lot of money. Gold, that's a big one. So the world's gold, the world total above ground gold. So you're not talking about gold that's still in the earth. You're talking about the gold that is in different banks underground. The world's total above ground gold reserves are estimated at 187,200 tons by the World Total Council. So it's about $7.7 trillion. And yeah, that's a big amount. Now, stock markets, which is even bigger when you compare it to cryptocurrency. Cryptocurrency is still in its infant phase with such a small market. I like to just go back and just show you the vast difference there is between the different markets and how small cryptocurrency is, especially when you compare it to the stock market, which is much, much bigger. So the global stock market is around $73 trillion. So that's more than 100x more than the cryptocurrency market, with the United States having a very big portion of it. So the United States has 38% of the stock market. Europe is around 5%. And then you've got China with 10%, and Japan with 7%. So that's still very, very big. Now, global money supply. This is where this is just mind-shattering. I can't actually put this into words since it's very difficult. First of all, just to imagine $100 billion, let alone $36.8 trillion. So first of all, we're just going to go look at the global money supply. So that's the total value of the world's easily accessible money is 36.8 trillion. This includes the world's coins, banknotes, and checking deposits. So this means that you take the physical money that you can actually touch and the amount that are in different bank accounts and so on, and that's like digital money more or less, like euro, US dollars that are in your bank accounts, and you put that all together and you've got $36.8 trillion, and that's a lot of money. Now it goes even further with the broad money. Now broad money is a bit of a different concept. It's a bit harder to get your head around what it actually is, but it's the total value of the world's money is 90.4 trillion. That's broad money is the narrow money, and this includes coins, banknotes, money market accounts, as well as saving, checking, and time deposits. So also includes different accounts which are not as easily accessible. So here 8% of this amount is physical money and 92% is non-physical. So if people tell you they prefer money to be physical and they can touch it and so on, you should remind them that actually only 8% of the actual money in the world is tangible, is something that you can touch. So we're already living in a world where most money is actually digital, and it's just a concept, and people give value to it, even though most of the money that they have, they cannot actually touch it. On the next is global debt. So this is a very depressing aspect of our monetary system, especially when we look at the size of it. So first of all, we've got the developed markets. The global debt is the total amount of debt, including net accumulated by governments, corporations, and households. So then it could be loans and different debts that the government has accumulated over the years, and it adds up to $250 trillion, which is 325% of the global GDP. Here's a nice chart comparing that 70 trillion of the world debt, 33% was added in the last decade alone. So I don't want to imagine how it looks like in the next decade if we continue at this pace. In my opinion, a financial crisis is imminent in the next 1 or 2 years. So here's a nice little graph. Global debt is currently at record highs, partially thanks to the sky expansion of credit in China. The China debt as percentage of GDP, and this has also increased by a lot. So here we've also got the emerging markets. Let's continue. An even bigger monetary supply and financial supply would be the global real estate. This valuation is even higher, and it's actually very difficult to afterwards put this into perspective, because I'm already lost at the $100 billion, and then we come with numbers like 217 trillion, and it's just like beyond any possible vocabulary that I have to explain what it is, because I can't even imagine it myself. So this is really massive valuation. So the estimated value of all developed real estate in the world amounts to $217 trillion. This covers residential property, offices, retail spaces, hotels, and so on. So it's a very big amount. We've got the agricultural real estate was around 26 trillion, and the rest, the residential properties and hotels and so on, is around 29 trillion. Ah, no way, actually the residential properties is 75%, and that's like a lot. And 21% of the world's total residential assets value is in North America, which makes sense. Europe is 24%. Derivatives. Now, derivatives is actually quite a difficult one to evaluate, because first of all you have to understand what a derivative is, and you've got, as an example, you've got futures contracts, forward contracts, options, warrants, swaps. So when you make a contract where you believe that the price is going to increase or decrease, you create a future contract, and that is already creating a valuation for a certain stock. Very often farmers use these future contracts to make sure that they've got the same price for grain for the next 2 years, and to be able to calculate better the production rate and so on. So the low end estimate of the size and scope of global derivative markets is 544 trillion on a national contract basis. And just quick, the derivative is a contract between two or more parties that derives its value from the performance of an underlying asset. Like, that's what I mentioned with the farmer as an example. He's got his lovely farm, and he needs grain, and then he buys his contract so that he gets the grain at the same price for the next 2 years. You've got many different industries, for example, different coffee shops. If they've got many coffee shops, they might have a futures contract for coffee beans, so that they know, okay, we're always going to get our coffee beans for maybe $4 per kilo for the next 2 years, and that makes it much easier to budget for the next upcoming years, and in cases like a shortage in coffee beans. And very often a farmer or so on, when he believes that there might be a shortage, he will purchase on future contracts, and it's possible that the future contract is at a bit higher price than the current price. However, he's got the safety that it's locked to that price. Now, banks typically use sorry about this annoying pop-up. Let's close it. Banks typically use high amounts of leverage to attain these positions. Some derivatives, such as commodity futures, are traded on regulated exchanges such as the Chicago Mercantile Market, CME. However, the majority of derivatives are traded outside of exchanges between private companies and are called over-the-counter trades. So this valuation is, of course, massively inflated due to the leveraged aspect of these derivative market. One thing is that collateralized debt obligations and credit default swaps are two derivative types that are infamous for their roles in the 2008 financial crisis. So one movie that is a fantastic watch is The Big Short. I highly encourage you to watch it, because there they show different how the derivative market, and how easy it is to create like packages of different features. And there they were talking about the real estate market and how easy it was to bundle up different really low class mortgages and so on, and then sell them as a AA rating bond, if I'm correct. And that the problem is, when you do that, and the lower aspect collapses, then the whole system collapses, and that caused the financial crisis of 2008. So now this is the lower end of the estimates, is around $544 trillion, and the high end estimate for the value of all derivative contracts is high as $1.2 quadrillion. And the problem is, no one really knows how to calculate it, since it's such a big amount of money. And here's a few opinions on what derivatives, how they will influence our future market. So many finance professionals consider derivatives to be zero-sum trades. So in other words, there's a winner and a loser on each side of the bet. However, other experts warn that the massive size of the derivatives market could contain significant risk and consequences to global markets. And since in the last decade, the stock market derivatives and everything has been just constantly rising. In my opinion, that's one of the strong indicators that a financial crisis is imminent in the next 2 years, especially if you look at the government bond yields, and they have been rising, especially the short-term bond yield interest rates have been rising considerably. The derivatives genie is now well out of the bottle, and these instruments will almost certainly multiply in variety and number until some event makes a toxicity clear. Central banks and governments have so far found no effective way to control or even monitor the risks posed by these contracts. In my view, derivatives are financial weapons of mass destruction. And now, of course, you might have, and when we look at all these low squares, we might have forgot that each square represents $100 billion. And here on the right, we've got another comparison with Bitcoin, which is also $100 billion. And with this visualization and comparison, I just want to show that it's important that we have the big picture. We're at an infancy stage. The next decade can be just mind-blowing at how much growth potential. So maybe we can forget the price at the moment. Maybe it doesn't really matter if we're buying different cryptocurrencies at $5 or $7 or $10, or Bitcoin buying it at $3,000 or $5,000. If you look at the big picture, look at the next 5 years, 10 years, and how much growth we can experience compared to only the different biggest companies and so on. So this was my comparison video with the valuation of the different world markets and compared to cryptocurrency. Thanks to Money Visual Capitalist for this great infographic. I hope you had a great time and you learned something new. I'll catch you on the next one. Have a great day. Bye bye.